What is stock trading about? Let's start thinking about this question right now. What is stock trading really about? Is stock trading about buying stocks low and selling them high? Is stock trading about trying to find what's the best play? To me, as a day trader, I'm not looking for what's the best company. I'm not looking for what's the best buy. I'm not looking for that. What I am looking for, the number one thing is I am looking for reversals. Because as a day trader, that's all I care about. I know it sounds mean, but I do not care whatsoever about the company. I do not care whatsoever about what the CEO is doing. I do not care whatsoever about what their earnings was. I don't care about that. All I care about is where is this stock going to reverse? Because guess what? We make money when a stock is moving up, moving up, moving up, moving up. And then if we see that there's a good reversal, guess what happens? This is where we make money as the stock starts coming back on down, back on down, back on down, back on down. If we can figure out where do reversals happen, that's where we make cash. Now you could look for reversals on the top side and get shorts. You could look for reversals on the bottom side and be able to get nice dip buys and bounce plays as it starts working itself back on up. Remember, reversals are beautiful. Reversals are absolutely amazing. Reversals are, again, times that you guys can be able to jump in on plays and say, wow, this is absolutely fantastic. Wow, this is absolutely great. I want to be able to find where reversals are truly at, okay? That's what I want to look for. So today, what I want to teach you guys is about figuring out how can we be able to find reversals? How can we be able to figure out where these reversals are going to happen? Now, there are about 3 different main ways to be able to figure out where reversals are going to happen, right? The first way is going to be talking about natural resistance. So natural resistance. This is going to be a lot of that psychology, okay? So natural resistance is going to be kind of those dollar marks, those whole dollar marks that I'm talking about. So let's start with natural right now. Natural resistance, okay? These are going to be reversal areas. As I said, strong psychology numbers. Strong numbers where people are just going to kind of say, ooh, I don't know if we're going to break that barrier. Even though it's just a penny, going from $9.99 to $100 per share, people are going to say, ooh, that's only a penny, but that's now $100 per share company. So the perfect example we have right here is FFIE. FFIE right now is starting to squeeze and is starting to break because it had a very strong psychological number. Take a look here. What we have right here, FFIE. Stock goes from 40 cents and spikes all the way up towards $1, right? That's awesome. Everyone sold at $1. How does everyone know to sell at $1? Well, because guys, it's kind of like an unwritten rule. If you go from 40, 50, 60 cents and you run up to $1, this is where you lock in profits. You are now going from a penny stock to now again $1 per share. Whoa, that's too strong for me. That's too strong of a barrier for me. Let me go ahead and start moving on from this play. Let me lock in my profits when I have them. So guess what again happens next? This stock starts coming back on down. You can see it tries again. No. Too strong of a barrier, comes on down. Too strong again. Guess what happens? It goes, nope. Too strong of a barrier, starts coming on down. And then guess what happens? FFIE finally breaks it. And you're wondering why FFIE is going on this very big spike. You're wondering why FFIE is bringing this big time momentum. You're wondering why FFIE has this hype and has this action towards it right now, because it is breaking this barrier, and this barrier leads to breakouts. But you know what I've learned? And you know what I'm already seeing people in chat talk about here, guys, is they're saying, Deck, FFIE is breaking on out. And I say, okay, who cares? And we say, Deck, well, breakouts are so awesome. Guys, I'm not here to play breakouts. Let me show you guys something. FFIE at this moment had one attempt. If you try to break $1 right here, you would have taken a loss. And you say, okay, well, you know what? I'm going to try to break $1 right here. You're going to take a loss. Okay, well, I'm going to try to break $1 right here. You're going to take a loss. And now people become obsessed. Remember, you're going back to your old ways right now on saying, ooh, I want to nail this breakout. I want to nail this spike, because now it would be finally the win. So you're telling me, what do we have here? If we try to buy it on the first one, we lost. The second one, we lost. The third one, we lost. And finally, if on the fourth one, we would have won. So that would have been what? 3 losses here, right? 3 losses, and we would have had 1 win. Okay, is that what we want? No, 1 win. That means we have a 25% chance of winning. We have a 75% chance of losing. And still, we're going back to our old ways right now. I'm saying, oh, well, Deck, I want to find the breakout. So you want to have the 25% chance of winning and the 75% chance of losing? Why not reverse that? Yes, it is cool when we see breakouts. It is cool when we see moves. But we want to realize that if we can understand where these natural resistance lines are, that is where the stocks are most likely going to turn. So that is what we're always focusing on. That is what we're always looking at. In many cases, we will see stocks turn at these natural resistance lines. Now, the strongest resistance lines are going to be at the price of $1, $5, $10, $15, $20, $25, then again $50, $100, $200, $250, $500, $750, $1,000, right? These big numbers are going to be very strong resistance. But you guys want to know even something better though? On the smaller micro cap plays, the plays that we're going to be trading a lot of times, you are going to want to focus on 1, 5, 10, 15, 20, 25. That's what you guys are going to want to be focusing on, kind of $5 increments. But within those strong major lines. We will have minor lines. So I kind of want to write this on out and say the strongest. So let's put this on a scale right here. And let's say the strongest resistance lines where we almost always see turns first time we touch. Now, I do want to have something right here. If you guys touch it once, touch it twice, touch it 3 times, yes, eventually we're going to break out. But if I'm talking about the first time we touch it, if we touch it once, there's usually always a guarantee we fall. If we touch it twice, it usually falls as well. But if we keep building higher lows, then yes, we can break out because that shows strength, just like we saw in FFIE right there. But I want to show you again the numbers and the lines right here that are number 1, the strongest. Then on top of that, number 2, let's just say relatively strong, right? And number 3, let's just go with, solid, right? You'll see reversals at these every now and then. So as I already stated, the strongest lines of resistance are always going to be $1, $5, $10, $15, $20, $25 in the smaller plays. So it is every $5 increment, just a little heads up for you guys. Now, still relatively strong numbers are going to be every whole number. It's very difficult for a stock to kind of break through a whole number, which will be, let's say 1, 2, 3, 4, 5, 6, etc. right? As it goes on up. And you will see for smaller plays, right? It'll be more every like 50 cents, right? So it might be $1.50. Then it'll be $2.50, right? Then it'll be $3.50. So maybe even $3.75, like kind of within this region. So you always want to realize, hey, if we're coming up to a strong resistance line, these areas we usually always turn on the first time touching. Then of course, we always want to be aware that we can turn on whole numbers. And then every now and then, we might just turn if it's a very small play on the $50, $52.50 area. So I just want to go through some examples here on today. Remember team, I like to look at today's examples. I don't want to show you guys about textbooks that happened, back in 2009 on times that these happen. I want to look at today's examples and see, do we have reversals of today? Well, what do you guys realize? We realize we run up towards around $3, right? And guess what happens? The stock starts falling on down. There's again going into not the strongest resistance, but we do have these reversal areas right around $3 right here. LSDI, what did we come on up to? Right near again that 250-ish mark. We had some trouble over on LSDI. Again, LSDI, what really happened on this play though? It's when it broke through $1. When it broke through $1, that's where the stock started getting very crazy. Started getting a ton of momentum, started getting a ton of action. That $1 break here. A lot of times you want to wait kind of after these stocks break out throughout the day of where these are going to reverse. And also helps when we have a little bit more breakouts. Look at what FFIE is doing right here, team. Again, don't fall back into your old habits. Oh, Deck, I'm sorry. I thought the stock was going to break out. I only wanted a 25% chance of winning, so I jumped in on this play and I'm in the red. Why is it every time I buy a stock, it falls on me? Guys, these aren't good companies, right? Take a look at past chart history pattern on FFIE. FFIE, where was it all the way up to? It was at $117. It's now at 94 cents. Is this a stock you want to buy? The answer is no. Let's stop being crazy here, okay? So first thing again, always be watching natural resistance lines, okay? So natural resistance lines is where we always want to be looking at. What is next on the spectrum? Well, next on up is going to be, first we had our natural, which is going to be those whole numbers. Next on up is going to be extremely important as well, which is going to be previous chart history. So previous chart history. Now, what you guys will notice a lot of times is that things will add up. So what I mean by that is you guys will notice that your previous chart history pattern, stocks will tend to reverse at natural resistance. And the fact is, if we have natural resistance and previous chart history lining up very nicely, well, that's just going to make things even better for us. So let's take a look at some examples here. Let's take a look over on LSDI here. LSDI, how do I look at previous chart history pattern? What I'm always going to do is I'm going to look to see where is there a straight platform? Like where is there going to be an area where it seems like we always bounced off of? And where is there an area that seems like we always got rejected off of? And this is going to take a little bit of practice. So what I would do is I would try to ignore today, ignore this candle right here, and try to take a look and say to yourself, is there an area, is there a price that I see every single time we hit, we fall, or every single time we hit, we bounce? I'm going to say I do see an area that seems like we bounce off of every time, and that's going to be right around this mark. Would you guys agree with me that every single time in the past, it seems like we bounce off again 190, bounce off 190, bounce off again 190, bounce off 190. You can see top rejection at 190, top reject. So I would say, okay, 190, ooh, we're underneath 190. This is probably going to be an area of resistance. Would that make sense to you guys? So basically what I'm trying to get to you guys at this moment is if we are underneath, right? If we are underneath 190, okay, we fall underneath 190. 190 is an area that people bounce off of. It's going to be holding up as a ceiling. It's going to be holding up as a roof. If we are on our floor right now, okay, you're on a floor, you bounce on your floor. Now imagine if you go downstairs. If you go downstairs, that's now your roof. roof. So the thing is, if I realize that we have bounce here, bounce play here, bounce play here, bounce play here, bounce play here, guess what? This 190-ish mark is most likely where we're going to touch when we're underneath it, and then we're going to go down. LSDT. Is it funny that this morning we fell on down, then we tried to get back above 190, and then we collapsed all the way back down lower? We fell on down underneath 190, we ran up to 190, we hit the roof, got rejected, and then came crashing all the way back on down here. So you're wondering, Deck, why the heck did again LSDI start falling right around this 190 mark? 190, we hit it and we got a super strong rejection. Past chart history pattern just told me that answer. So the same exact thing when I go ahead and I say, okay, well, how high can this play go? I start asking myself, and sometimes I just take a line just like this. Let's take a line, and you can see, okay, 190 looks pretty clear. Is there another area that looks very clear on like, okay, where can I be able to see this, turn and fall? So I see a top right here. I see a top that lines up right here. Maybe a top right here. Would that line up to these old tops over here? So let me put a line like right around this region, and with this line on up. Ooh, this looks pretty good, right? Look at this. Top resistance right around 285. Top resistance 285. Top resistance 285. Top resistance 285. Bounce play off 285. If we ever start spiking on up, this would be a great area where it's our roof again. Hey, boom, go all the way back on down. So we would be able to see that LSDI. This would be a great play for us to be able to see this one, be able to spike on up, hit this mark, and fall back on down. That's looking at past chart history pattern, right? Let's take a look over on, let's say, BMTX here. BMTX, this play. This is kind of a more choppy little play here, but let's go ahead and take a look at BMTX, okay? BMTX, try to practice right now. Everyone pause the video, take a second. Where do you see, don't look at today's candle, where do you see a platform? Where do you see an old floor or an old ceiling where if we hit that area, we are going to fall and reject on down? Take a second and try to figure it out over on BMTX. I can see it, but again, it takes practice. Now, what I see at this moment, traders, is I see a couple different areas. I would say number one, taking a look, I see we have a bounce play right here. I say we have a bounce play right here. I see we have top resistance right here, and this probably all lines up in some manner. So let's go ahead and put this right here. This would be an area that I would definitely be starting off at, right? That would be a nice area. But I think a lot of you guys are probably looking a little bit higher, which is fine, which is great. Because I do see that we have a lot of strong resistance, I would probably say, right in this area, right? This one is a little bit tricky because you could go a little bit more sporadic, right? But like 385, I would say it would be the best area total if we start seeing a spike. We start seeing a little consolidation back here. We have top resistance, got rejected. A little bit under, got rejected. Hit the top resistance, got rejected. Right to not 285, but to 270, got rejected. That would be a great area for me to go ahead and start looking for a reversal, because what has happened in the past usually happens in the present. If we got rejected at 385, people say, okay, 385. We got rejected at 385, people say, okay, 385. And sometimes you can scroll back even farther and you can say, oh, wow, okay, hey, these are going to be good areas. I'm going to give you another example here. Another example would be, take a look at this spike on BMTX. BMTX spiked all the way up to 1460. And then again, a couple months went by and then BMTX started spiking its way back on up. Where did people sell this play? They started selling it when it got back up towards around this old top, right around that 1460 mark. So it's not like these numbers, these plays, these stocks are going up to random areas. These plays are usually going up to and turning and reversing at an old previous area that everyone sold off at as well. Because when you're buying a stock, everyone says, where do I sell at? Where do I sell at? And everyone says, oh, sell at the area that everyone sold off at last time, because that's where everyone's going to sell at again. So where it sold off last time is now in our head on, okay, this is where it's going to start turning and reversing. And since everyone's looking at that area, guess what happens? It now comes crashing back on down as it follows that area. So let's look at some more top gainers here today. So traders, take a look at this. CCLD. This is a perfect example. And remember, guys, this is not me looking through a textbook. This is not me, again, looking at, random areas here and trying to be like, okay, what actually works here? This is looking at today's top gainers and giving you the answer. So CCLD, why did it turn at where it did? Okay, I'm going to change the question up a little bit. Why did CCLD turn at this price right here? You can give me two answers. Easy, 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 easy. Well, Deck, number one, it turned just because it hit $3. $3 you just taught us was a natural resistance line. It's going to turn around $3. Boom, perfect, right? CCLD, it's a whole number, $3. That is absolutely great and absolutely awesome. Now, traders, what else can you guys see out of this play? Well, does anyone else notice that it bounces at $3 and bounces at $3 and bounces at $3 and bounces at $3 and bounces off? Put a line right at $3. Put a line across the board at $3. Can anyone else notice that this is where the stock bounces almost every single time, right at that red line? Bounce, 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 monster sell-off. Where do you think people are going to sell this play? They're going to sell this play every single time as it comes up to $3. So it goes on a monster spike. Sure, let it spike, let it spike, let it spike. And then guess what? At $3, we know that we are going to get a reversal. We know that we're going to get a drop. We know that we're going to be able to make money. We know that we're going to be able to profit. Traders, Traders, it's amazing. It's so awesome how you guys can put the odds in your favor right here, right? We were bouncing on the floor, bouncing on our floor here. Now again, we're underneath the floor saying, hey, let me in, let me in. And again, it goes right back on down. So you guys can realize these plays on how the past chart history pattern can tell us when we're going to fall. Now remember, is CCLD a good play? No. Again, guys, none of these are good plays. So I'm going to say it now. I'm going to say it a bajillion more times. Get it out of your head. Get it out of your head of buying penny stocks for, again, $1 million profits. When instead, wait for other people to pump these plays on up and then make your millions as the stock falls on down. Make your profits as the stock drops. These aren't good companies. Why are we trying to nail a 1 in 100 when we can nail a 99 out of 100? That's when we will make our money. You guys will be much better. You guys will be much more consistent. You guys will make a lot more cash here. So I just went over, again, 2 different ways on how you guys are going to be able to find reversals. Reversals are going to be from natural resistance, and reversals are going to be from chart history resistance. And both of these can also line up. Now also, we might be able to line ourselves on up with another one as well, which is going to be our detailed resistance, or again, I would just say some indicators. Okay, so indicators. So let's put on the popular indicators. Popular indicators, guys, as you guys know or may not know, that I use 200-day moving average, 50-day moving average, and 13 EMA. So these are going to be indicators that I like to use: 200-day moving average, 50-day moving average, 13 EMA. Now, the whole point of these is they usually hold up as a line of resistance. When a stock goes on a very big spike, it usually reverses right around these averages. So let's just kind of look at a few different examples, see if there's anything that's really good for us. I mean, starting on off, let's just take a look over on LSDI. LSDI, you can see it usually stays underneath this 50-day moving average. Usually comes up to the 50-day moving average, falls underneath it. You hit the 200-day moving average, gonna hold up as another line of resistance. Okay? FFIE. FFIE, everyone's sold. Where at? The 200-day moving average. Very big spike, hit the 200-day moving average, everyone's sold at that area. So the 200-day moving average is kind of always a little bit higher up. It's always for the breakouts for these penny stocks, because these penny stocks have been fading and falling most of the time. So the 200-day moving average is always like above. It's kind of like always the target. So same exact thing when I take a look at LSDI, you can see it's like always the target we want to try to get up to. In most cases, it will always be like the target. It's always going to be like the idea. So if you ever see a stock that is spiking, like GV, what would be the target? 200-day moving average. Everyone would sell. It's kind of like the unwritten rule. Okay, hey, everyone go ahead and look to sell when you get on up towards around this 200-day moving average. Okay? So what I wanted to talk about right here was understanding that we're not looking for what's the best play. We're not looking for what's the company's fundamentals. We're not looking for what's the next moonshot. We wait for the moonshot to happen. We wait for these crazy ones to happen, and then we just make money as it falls. How do I know when these plays are going to fall? Well, we can look at natural resistance, so we have a better entry. We can look at detailed resistance. We can look at all these different opportunities for us to be able to make this big time money and be able to make this big time profit. Now the big thing, team,